Did you know it's been 20 years since Google came out with its $3 billion IPO in 2004? More astonishingly, did you know that the infamous men's magazine Playboy almost caused Google's IPO to be derailed? Continue watching to know all the astonishing facts of Google's IPO. Google was founded in 1998 as a private company and even its basic business details under wraps. This was until 2004, when an arcane law applying to private companies with more than 500 shareholders forced Google to go public with its financial numbers to comply with U.S. securities laws. When its finances became open to scrutiny, analysts were stunned to witness a company that was both exceptionally profitable and extraordinarily fast-growing, a feat very few companies could match. However, Google's 2004 IPO announcement was met with skepticism and negativity from Wall Street. People predicted that talented Google employees would cash out and quit, and a focus on pleasing Wall Street would cause Google to lose its independence and the quirky spirit that had made it so innovative. In short, a public offering would be one of the worst things that could happen to Google. As unconventional a company Google was, as was its IPO. Google felt traditionally structured IPOs favored insiders and were not in the best interests of the company. So Google priced their IPO through a Dutch auction, where instead of the investment bankers fixing the price, it was the customers deciding the price in a process opposite to a regular auction. No company the size of Google had ever done such a thing, and Wall Street viewed this decision as arrogant. One analyst wrote, "Participating in the Google IPO auction is gambling, not investing." Google's IPO prospectus included a letter from the founders Larry Page and Sergey Brin. They wrote, "Google is not a conventional company. We do not intend to become one." They made it clear they would take their risks, and they would not bow to pressures from Wall Street to show consistent quarterly financial results. They explained they would remain risk-takers, willing to place bets that had only a 10% chance of earning $1 billion over a long period of time. The SEC's quiet period requirements prevented Google from talking about their business in the run-up to the IPO. Google was in the media spotlight and criticized for their business, management, culture, almost every aspect of who they were. And because they had to remain silent, they couldn't defend themselves or correct misinformation. There was a gap between what was written about Google and reality. In August 2004, the September issue of Playboy magazine hit the stands, and all hell broke loose. Larry and Sergey had given an interview to the magazine in April, but it was published in September. As the interview touched on business issues, it could be in violation of the quiet period rules of the SEC and delay the IPO. Google did not want any delays, so they came up with a solution with the regulators. They included the Playboy interview in their official SEC filing as an appendix. Google was in the midst of a perfect storm of bad news. When the IPO bidding began in August 2004, it was a tough environment, and some tech companies had even pulled their own IPO plans. Google's range of $106 to $135 a share didn't find many takers, and Google's founders wondered if they erred in choosing an auction-based approach. When the bidding period ended, it was clear that Google wasn't going to be able to sell all the shares for the price they wanted. The Google board considered delaying the IPO in the hope to get a higher price later. The underwriters, however, believed that they could close the IPO between $80 to $90 a share if Google reduced the number of shares for sale. This was a disappointing outcome for Google, but it wanted to put this chapter behind and get back to running their business. So on the 18th of August 2004, Google agreed to price the IPO at $85 a share. On the day of the listing of the shares on NASDAQ, the Wall Street Journal ran a headline which said Google's miscalculation and hubris had hobbled the Google IPO. But good news was round the corner. Google shares opened at $100, an appreciation of almost 18% above the IPO price. Google was finally public, and the exhausting chapter was behind them now. Within a few days, its share price hit $110, and as its shares fared beyond expectations, it wasn't surprising that Google received a lot of positive press coverage. The New York Times praised Google for standing up to Wall Street and dictating their terms rather than the other way around. Today, 20 years later, Google is a $2 trillion tech behemoth. It has become a household name and has given humongous returns to its shareholders. The share price is up 7,000% in the last 20 years, which translates to a 24% compounded growth rate, which is phenomenal. Please subscribe and follow us for more astonishing financial facts.